Welcome to the Harmonic Pattern Foundation course. My name's Scott Carney, creator of the harmonic patterns that comprise the harmonic trading approach. This is the official harmonic trading educational program for the TradingView platform. I want to personally thank TradingView for permission to use their charts in this presentation and recommend their fantastic software. So check them out at tradingview.com. Introduction to harmonic trading, harmonic ratios and ABCD patterns. Defining the natural cyclical phenomenon in the financial markets as measured by harmonic ratios and ABCD patterns, also known as market signature. Harmonic trading is all about measuring the market to create what I call a defined trading realm. We want to look at measured moves in the market and analyze trading history to define our opportunities. Harmonic measurements define where action has been and where it can possibly go. Each measure can provide a proper expectation of what is realistically possible to assess the potential opportunity. Now, a measured approach underscores the importance of defining all trading parameters. So before we even enter any trade, we have a clear idea of what our identification price parameters are, where to execute, and how to manage that position. Harmonic structural measurements in the financial markets. Now, we utilize these measures to define the proper area of what to identify, where to execute, and how to manage a trade. Now, harmonic trading encompasses these two types of measures: harmonic ratio measurements and sine wave structural assessments. We'll look at both in the next few slides, but it's important to note that we're utilizing exact measures to define opportunities. Harmonic ratios. Now, ratios employed within harmonic pattern measurements are derived from the Fibonacci sequence. And that quantifies the natural cyclical movements that repeat throughout the universe and in the financial markets. And we'll talk about the Fibonacci sequence here in a bit, but really what we're looking at are ratios that are manifested through nature and repeat in growth cycles of natural movements, as well as in the financial markets. Now, who is this Fibonacci? So a lot of information about Fibonacci and strategies that people talk about to analyze the market utilizing Fibonacci ratios. But Leonardo Fibonacci was an Italian mathematician who was responsible for many important discoveries, but most notable, the Fibonacci sequence. He wrote a lot of these discoveries in his book Liber Abaci. Now, this principally popularized the arithmetic numeric system, which is a major advancement of Roman numerals. But for our purposes, we're interested in this Fibonacci sequence. Now, this Fibonacci sequence was the result of a mathematical problem that Fibonacci proposed regarding the growth cycle of rabbits. And I don't need to get into the details here, but simply he was looking at a hypothetical summation series where if you have a pair of rabbits reproduce after a multiple series of cycles, how can we approximate and what are the growth cycle mathematical proportions? His summation series started with 0, took the number 1, added those two together to come up with the following sequence of numbers: 0, 1, 1, 2, 3, 5, 8, and so on. Now, the real benefit of what this mathematical sequence is all about comes after the 8th calculation. So after we reach these series of calculations, what we see are these golden proportions, the 61.8 and 161.8% proportions that are manifested in these growth cycles. Now, they have applications in geometry and also are manifested in natural cycles, but the mathematical significance of each iteration is that once we get past the 8th and ninth calculation, these divisors actually are closer and closer to the exact 618 or 1.618 into infinity. So really the purpose is that these growth cycles, for one reason or another, are repeated through nature and that they're constant. Now, if we're looking at these Fibonacci relationships in the natural world, I don't want to get into a long discussion, and there's numerous examples, and it's a fascinating subject to research, but these manifested throughout plants, animals, the human body, even in astronomic universal planetary proportions. For our purposes, probably one of the most profound examples of these type of relationships and these natural cycles throughout the universe and in nature is what is called Fibonacci phyllotaxis. Now, this is just one example, but in one study of over 12,500 specimens of over 650 species of plants that possessed a spiral or multiple phyllotaxis pattern, 92% of them exhibited Fibonacci-related traits. When we look at the human body, same thing. We see a lot of interesting proportions. Many of these proportions, Leonardo da Vinci uh, created many works of art that demonstrated the human body proportions, and even simple proportions. You could get a ruler and compare the general length of your finger to the palm of your hand and so on. They all have these golden proportions. But the big deal is relating this natural cycle phenomenon to the markets. Because when we apply these ratios and these measures, these define natural levels of harmonic support and resistance that we can measure and anticipate in advance. That's our advantage. Now we can consistently pinpoint these repetitive natural cycles because we're utilizing the same measures, the same ratios to define these distinct price parameters. So what is a harmonic ratio? Well, it is really a prescribed ratio that is directly or indirectly related to mathematically derived phi, that is 61.8 or 161.8% proportional relationships manifested in natural cycles of growth and decline as demonstrated by the Fibonacci sequence. For the markets, there's two types of harmonic ratio measurements, a harmonic retracement and a harmonic extension. Let's look at a harmonic bullish retracement and how we measure it. Typically, we're going to see some type of action on a price chart where this would be an initial thrust, some type of rally, and then we get a pullback. So this X to A leg is called the primary leg. This is the distance that we will measure. And typically, we will multiply this primary leg by one of the harmonic ratios and then project that down to get our B point. This is the retracement leg. So we're looking for, after this initial move up, some type of area at one of the prescribed harmonic ratios for a potential opportunity. Now the primary 61.8% harmonic retracement ratio is the most popular Fibonacci retracement of all. The primary 61.8% ratio is the defining element of many harmonic structures, but most notably the Gartley pattern. It's directly derived from the Fibonacci sequence, so that's why we call it the primary ratio, because it's directly from that sequence and is found throughout many natural cycles. In my opinion, it's the most misunderstood of all the ratios because I actually think its singular importance is frequently overstated. However, it is effective in specific situations. Looking at this illustration of a primary 61.8% retracement, here we have the A to B leg. That's our primary leg. And then we're usually going to see some type of pullback. This pullback from B to C is 61.8% the distance of A to B. So if A to B is 10 points, we look for a 6.18 point pullback. Looking at this chart of euro versus the dollar on a 60-minute basis, notice we've got this thrust here, big move up from X to A, and then the pullback to the B point was right at the 61.8% retracement, right at 112.34.5. And then we're looking for that pullback at the 618 for a resumption in the trend. This is definitely an oversimplification. When we're looking at a harmonic bearish retracement, same situation of looking at a defined price leg of a primary X to A move down, followed by the retracement, the A to B bounce that retests this initial point at X. The primary bearish 61.8% retracement, we go from A to B. Again, if that's 10 points down, from B to C, we're looking for a 6.18 pullback. Here on a 4-hour chart of the British pound versus the yen, notice here's our starting point, right up there, around 145.30, 145.40, all the way down here to the A point, and then we get a 618 pullback, 61.8%, all the way back to 143.84. We're looking in that area for potential reversal. Again, this is an oversimplification, but just the simple retracement of that 61.8% pullback is the exact level where we're looking for an anticipated move. Primary 1.618 harmonic ratio extension. Again, this is directly derived from the Fibonacci sequence. It's the primary 1.618 projection or extension. This is a defining element of many patterns, especially the crab. But this 1.618 extension, the most important fact, it's a state of extreme price action. Now, most harmonic measures have a specific expectation tied to them where they denote a certain type of price behavior. But when we're looking at a harmonic bullish projection, we're looking for something that moves down past our initial starting point at X. Now again, utilizing that 1.618, we're looking for that primary leg and would multiply that primary leg by 1.618 to get our projection leg to define where that 1.618 completes. Right here, starting with our X point to A on the British pound yen on a 30-minute chart here, we have this distance from X all the way up to A at 174. Multiply that by 1.618. That projects right down here to where we look for our harmonic support, right around 170, 170. Harmonic bearish projection. Now this is where we have a primary leg, and this is where after a downside move, we're multiplying that by 1.618 and projecting that entire distance up to our B point. Again, once we reach this point at B at 1.618, we start to look for price action that is overextended. The market can only move so fast for so long. In this illustration of a primary bearish 1.618 extension, again, we're looking for a very distinct A to B leg multiply that by 1.618 for our projected C point level. And it's at that structural area where we start to look for signs that the market is overextended. On this daily chart of the dollar yen, here we have a very clear downside move followed by a projection up right to the 1618. Now, when we see these type of moves and we see that kind of rally on the way up, this is one distinct level that we're measuring. Once we get the breakout above this point here where we're going to new highs, we're looking specifically at that 1618 level at 125.59.5. Now, we don't know it's a hard harmonic resistance unless we're considering maybe other measures or other confirmation techniques. But this is the basic assumption of how we analyze structural assessments, structural measurements, to get an idea of the fact that the market has moved a bit too far, too fast. Harmonic ratios derived. Now, of course, the 618, 1618, they're not the only ratios we use. The other ratios utilized within this analytical framework are derived from the primary 618, 1618, but this is what makes the patterns harmonic. There are one or two exceptions noted, and I'll go through that in a minute here, but it's important to realize that the ratios we're utilizing reflect what the natural cycles exhibit throughout nature and the universe. And so we're trying to identify and measure these same cycles in the markets. We utilize this framework of ratios from 382 all the way to 3618 with all of the various derivations noted here. But the basic 618 primary ratio and the 1618 primary extension are the two starting point ratios where then other derivations, for example, the 786, which is the square root of the 618, or the 886, all have their situational relevance. And we'll get into that in the session when we look at how to measure complex M&W harmonic patterns. But it's important to note that we utilize these numbers, these ratios for a reason, because they're related to the base harmonic ratio relationships that are exhibited in all natural cycles. So that whole framework is what I call a bullish harmonic ratio progression when we're looking at something, some kind of price movement from A to B here. As B to C commences, we would look at each level, 382, 50, 618, 707, on the way down. Now, certain numbers, say a 618 or a 1618, are definitely going to have more significance, or I would pay more attention to them. On a bearish harmonic ratio progression, we look at this A to B leg. Again, that's your primary leg, the projection leg. And as this B to C leg commences, we're looking again at the specific 382 level, 50 level. Now we combine that framework with ABCD patterns, which is also called market signature. This is the structural essence of harmonic patterns. Now, ABCD patterns are really just sine waves in the financial markets. We're simply assessing one type of sine wave because it's all based upon wave theory analysis of the collective buying and selling that produces price movements with actually cosine wave properties that, again, we refer to that as market signature, the type of structural movement that is exhibited. Why? Because the trading history is a record of the human energy vibration of cyclical buying and selling. All matter is energy. Energy moves in waves. possessing proportional relationships which repeat and can be quantified. Now, this ABCD pattern, it's a type of minimum energy wave in the financial markets where each leg represents a component of one complete cycle or vibration. So think of the pattern itself as one whole period of buying and selling, where that whole phase of the buying and selling has ended. Now, when we're talking about a sine wave or any kind of vibration, anything that exhibits a frequency over time that we can plot on a chart, or simply looking at this entire wave structure as a basic function of any type of wave property. Now, in the financial markets, we look at price movements. But for sine wave purposes, this could be a radio wave, this could be a cardiogram. The same properties are exhibited. Again, another fascinating topic to explore elsewhere, but for our purposes, we're going to focus on how to apply that into the markets. Because really, the cosine waves, that's the combination of waves of buying and selling in the markets to produce a multi-component chartable frequency of trading history. That's what we're trying to analyze. Now, this is a cosine wave through time. Again, this could be a radio wave, this could be a cardiogram, or this could be the next up move in the stock market. This is a basic wave properties of buying and selling of any bullish trend. The same could be said if this is in a downtrend, but this is how the market functions. We know that no market goes straight up or down. A market must go up to go down and vice versa. So the buying and selling is always going to be going back and forth within a certain range. Now, when we look at this type of movement, we can analyze these wave structures and identify the basic cosine wave of an AB equals CD, where each segment is equivalent to each other. And at the end of that wave structure, we see some type of reaction or inflection. It's at that starting point where we can start to make some structural assessments of a potential trade opportunity. ABCD pattern basics. Now, for market purposes, the AB equals CD pattern is a 4-point price structure that is a minimum requirement for most harmonic pattern setups. The AB equals CD pattern exact completion point is a structure comprised of two equidistant price segments that possess harmonic ratio proportions. Now we'll look at this illustration in a second, but it's important because we're looking for symmetry. We're looking for two legs that are distinct of equivalent length. And then we also look at each point of the structure. Here we have an ABCD equals sine wave structure where A to B and C to D are not only distinct, but they're equivalent. The bearer structure, we go from A to B, and this can be off of a distinct low and then have some type of pullback, followed by another equivalent move higher. So if A to B is 10 points, again, a pullback, followed by another C to D 10-point move. Now we look at reciprocal ratios. That's what we attach to those structures because, one, that gives us an idea of what the complementary measure is going to be, and also it gives us the type of ABCD to consider. This will be even more important when we look at complex patterns, but just know that each retracement ratio is actually related to the projection or the extension measure as well. Now, both of these measures come together to define the potential reversal zone. And this is a breakthrough concept for me that I introduced in my book, The Harmonic Trader. It is the exact price zone where multiple harmonic trading measurements that is the sine wave structures and harmonic ratios, complete in the same area to identify natural levels of support and resistance. The PRZ defines the price range where a pattern completes and a trend reaction or reversal can be anticipated. Now we'll look at more of that in the execution webinar, but this is essential. This PRZ zone concept is where we anticipate the price movement. The PRZ concept is one of the primary strategic advantages of harmonic patterns that effectively defines potential zones where natural cyclical constraints govern behavior. So no matter what, no matter the type of market, no matter what maybe the prevailing street wisdom may be, when we're analyzing trading history, the natural mechanisms of cycles that come in where the market must go up to go down, where it never moves in a straight line, that understanding of the breathing mechanism that the market must do is where we can at least capitalize on reactions at PRZs, if not confirm larger reversals in these zones. Now here's a bullish ABCD illustration. Again, A to B, C to D should be quite distinct and equivalent, nice symmetry. We're typically looking for one of the harmonic ratios. Minimum is a 382. A maximum is an 886. Same on the BC extension where we take this B to C distance, multiply it by one of the harmonic ratios. Again, minimum 113, maximum 2618, and multiply that down to converge with the exact A to B, C to D completion point. Now the potential reversal zone, the combination of measurements, really defines what the whole purpose of the patterns are about, because we're not looking at a singular point. Yes, the exact bullish AB equals CD completion point is essential, mandatory, but we also utilize that BC extension to complement the area. Here's a great chart, the daily of the Kiwi versus the dollar with a really nice A to B, C to D structure. Really nice symmetry, basically same distance in length. The A to B was about 3 weeks. C to D, just about a little more than 3 weeks of the distance, both being almost identical over the same period of time. Beautiful structure here. And notice that the stabilization that occurred immediately after hitting the ABCD completion point. That's the type of structure you want to see. Again, you're not going to see a distinct harmonic pattern in every market all of the time, but when we do see the clearest of structures, those are going to represent your best opportunities. Here's a chart of the price action in the potential reversal zone. Right here is the exact ABCD completion point. That's great because just under the 69.50 level is the minimum expectation where we expect the decline to end. Now we can start to look in this zone area for other factors, but at a minimum, the structure is telling us that somewhere in this area just under 69.50, we need to be paying attention. The bearish ABCD pattern, again, is a very distinct structure where the A to B leg and the C to D leg are equivalent. The C point must be at one of the harmonic ratio retracement levels with a minimum 382. So again, that's important because we could be projecting ABCDs all over the place. This is why the harmonic ratios help us to really distinguish those clearest structures. So the C point, that has to be a minimum 38.2% pullback, or we don't even consider it as a valid trade opportunity. This sets up a bearish ABCD pattern potential reversal zone where we've got the BC extension combined with the exact AB equals CD equivalent completion point to define the zone where we look for the harmonic resistance. Here on Euro dollar chart, it's a 4-hour chart. Look at the really distinct movements. Over the course of about 10 days, this initial A to B leg goes from roughly 105 all the way up to about 110 and change, about 550 pips. We have an exact 618 pullback to the C point. Now in this case, the C to D leg was a little bit extended, but again, another 550 pips on the upside gave us that exact ABCD completion. Now note, we're not looking down here or down here. We look at the exact ABCD completion point and look in this area for signs of potential change in character of trend. Here's a great chart of the price action in the potential reversal zone. Again, all of those numbers are defining this area around 112.70 for the harmonic resistance. Also notice how strong this was up into the zone. Despite that, look what happens immediately after testing these numbers. The market stalls out, starts to roll over. Took a little bit of a consolidation, but that is the exact type of change in character we want to see in a potential reversal zone for valid patterns in general. There are what are called alternate ABCD patterns. Now, I initially introduced this in my book, The Harmonic Trader, as a strategy to assess other harmonic structural possibilities. And we'll talk about that when we look at butterflies and crab patterns, but it's a situation where the CD leg is longer than the AB leg. Now, in a lot of my experimentation, what I was doing was testing to see if it was even possible. And so I multiplied the AB leg with a harmonic ratio. I was using a 127 and a 1618 to approximate what seemed to be an extended harmonic sine wave structure. Now, the alternate ABCD is not as important as the singular structural signal, as like the equivalent ABCD pattern, but it's a critical measure in specific situations. And it looks like this. It's, again, a very distinct A to B, C to D structure, but when we have this A to B leg, followed by the C point retracement, we simply multiply this A to B distance by 1.27 or 1.618 and project it from the C point. So if A to B is 10 points, we get that C point pullback. We would multiply it by 1.27 or 1.618. So then C to D would either be 12.7 points or 16.18 points. Again, more of an approximation measure, but extremely effective when we look at the complex patterns like the crab or the bat. ABCD pattern review. Now there's a lot in this webinar and I recommend that you go back and review it, but understand that ABCD patterns are minimum energy waves in the market that denote the completion of a basic natural cycle of buying and selling. It's where we look for at least a reaction at a minimum. It's comprised of two equidistant price segments. It's quantified by harmonic ratios with distinct symmetry to define the exact pattern completion point with a BC extension within the same proximity to find the potential reversal zone. The ABCD pattern is a minimum structural consideration for any harmonic pattern opportunity. Now, the importance of the ABCD varies depending on the pattern. And again, we do utilize alternate ABCD patterns in other structures. When we get into the pattern webinar, we'll look at those differences because they're critical. But the ABCD pattern does truly define the structural component of what harmonic patterns are all about. Now, along with the importance of why we use these ratios, it's important to just review the introduction to harmonic trading, the harmonic ratios, and ABCD patterns, because this is the advantage. This is the harmonic advantage. Proper ratio and structural measurements identify the same natural cycles manifested throughout the natural world, the universe, and can be applied to price movements in the financial markets. This is kind of the harmonic discovery. So we utilize the measures to determine quantifiable opportunities with well-defined price parameters for exit, entry, stop loss in advance. Finally, I really want to emphasize this, that all decisions are based upon the trading history of the market considered. So we're not looking at news, we're not considering fundamental reports. There's no information bias here. That's the critical thing. We're analyzing the trading history and looking for and identifying those cycles when they happen.